I'm Kimberly Woodard with Ebby Holiday Realtors. I've been selling real estate in the DFW area for over 22 years. And today I'm sitting here with Jeff Jannasch with Town Square Mortgage. And we are going to talk about the mortgage industry right now, what's going on. We're here in mid-April. Jeff, what are we seeing with rates?
Oh, well, a lot going on right now in our industry, a lot going on. So, very unique time. I think, right now with rates, they've been holding steady here of late in the mid sixes, which is a good sign because we've had so much volatility over the last, 6 months, year, whatever. It has been a yo-yo. And so really what I'm seeing right now is I'm seeing a little stability in the market, so it's starting to plateau, I feel.
Okay.
And I feel like here in the near future, when that is anybody's guess, that I think rates will start to come down a little bit. But I think, you and I were talking about a little earlier, that it's a good time to, start looking if you're not, because, we got such a hot market here. DFW is like, when you read what's going on in the housing industry, you're seeing national news, and that's just not what is reality here in the DFW area. So
no, we've seen, if you look at, I go back to when I bought my house in 2018 and how prices have changed from that point. You've got some people that are sitting, maybe on the fence right now. They're like, I'm going to wait until the market cools down.
Right.
Is that really?
No, well, again, DFW is I don't see a cool down in the near future. And really the reason for that is I see, we're talking to commercial lenders, and there's so many permits opening up. So there's all these businesses moving into the Dallas-Fort Worth area. They were moving all to Texas. Now it's really concentrated on DFW. They've stopped with Austin because the prices went up so much.
Yeah.
And so when that happens, I was reading there was 170 people a day moving to the DFW area, right? So there's not enough houses available. We have low inventory.
Right.
New home builders are starting to build houses again slowly.
Yep.
And with that, you're going to have, the minute rates start to come down even more, everybody's going to jump into the market. And what's going to happen, right?
Yeah.
House prices are going to go up, and they have to. It's just supply and demand.
Oh, definitely. So if you're sitting there on the fence,
right.
Should I buy, this spring and summer of 2023? Even though interest rates may be higher than you're getting a better probably price than you wait.
We were doing some math. I was doing it just like on a regular, let's say $500,000 home. Yeah. If the prices go up 5%, so this year they're projected. What I'm reading is they should go about 8%, 7 to 8% this year. But if you're on a $500,000 house, that is a lot of money. You're talking, $30,000. Plus, on that is what it's going to cost you in addition to buy that same house that would buy today. And then if rates come down and you refinance, that may cost you like $4,000 or $5,000.
Right.
So you're saving a ton of money by buying now. So, I would just tell people, don't sit on the fence, get out, buy a house now, because based on what we're seeing, the house prices are going to go up.
Yeah. So Jeff, everyone knows we've got the FHA loans, we've got the conventional, we got, we also have the VA, which is a great product for, people that are qualified. But what other things are out there that maybe people aren't really thinking of, or they're products that maybe we did use way back in the day?
Right, way back in the day. That's exactly what it is. We've got new products. Products that have been here forever that no one used for the longest time because rates have been going down.
Right.
So, there's a few different products. So affordability is obviously a big issue right now. People jump in and they're just like, wow, okay, I can't afford that. And so what we've been talking to them about is, the buy down, which is a 2-1 buy down, which has the interest rate like 2% lower in the very beginning.
Yeah.
So the seller would pay for, part of this cost to do this, or all the cost to do this. And then eventually the payments slowly go up over the next 2 or 3 years. You can do a 3-2-1 buy down or a 2-1 buy down. We're not going to get into that today, but give us a call. There are products like that. Also, we're seeing people do, the traditional buy downs on the interest rates, where if the rate is, let's say 6.5%, you can buy the interest rate down in the very beginning and pay a little extra up front to do that. So help with the affordability. We're also seeing people do, they're buying the private mortgage insurance. So people that aren't putting 20% down, they'll have that private mortgage insurance, which isn't as much as you think generally.
Yeah.
So call us on that. But we're having them pay that up front so then their monthly payment's cheaper because everybody's concerned about the monthly payment, not so much the out-of-pocket, because they're coming with so much equity to the table.
Yes.
And then one last thing we're seeing a lot more of is the ARM, the adjustable rate mortgage. We're seeing that kind of come back again as well.
Oh, yeah.
You didn't need an adjustable rate when rates were 3.5%, but now,
I remember
now
those
I have
days.
something to look at.
Yeah, they're definitely coming back, and so those are great products. And then maybe we have those buyers that they currently own their home,
Right.
And and with our marketplace, because our inventory is low,
Right.
Putting those contingency offers isn't as welcoming to a seller because, and it's not competitive enough either because we're in a marketplace where inventory is low, so you can't compete. So let's talk about I have some clients that looked at HELOCs.
Great, yeah, that's a great point. And so there's a few different things you can do in that market. What we do is they usually want to talk to us first because we want to evaluate what's the best situation, because there's usually multiple options when you get in there, but what is the cost, right?
Correct.
There's cost differences between the different ones. And so we'll look at the different options, but the home equity line of credit. So some people now are keeping their house and saying, hey, I've got a 3% rate on this house.
Right.
I can go rent this house and have positive cash flow, which, because rates have jumped so much and rents go up as well right now. So everybody's, everything's going up. So right now I've got a place to rent and actually make positive cash flow. The other thing, and then they'll do a home equity line of credit to maybe pull a little cash out of their house where, you do a lien against your property and pull cash out and use it for another property. So we're seeing a lot more of that of late. You've got bridge loans, which they're a little bit more expensive when you get into bridge loans, which is where you'll buy another property and they'll put a lien on your current property so that you don't have to do a contingent financing. And so when they do that, once you buy your new property, once your other property sells, then we'll refinance that property after the fact, and then you'll have a permanent mortgage at that point. So it's only a temporary mortgage.
Yes. So some great options, especially for those, homeowners that are thinking, well, maybe I really want to move, but I'm a little nervous about it. And then am I going to be competitive? Because of course I think I can sell my house. I don't know if I can find that one. They can go ahead and go shopping, find that new house, get themselves settled, and then do what they want to do, whether they decide to rent or rent it out or sell it.
It's something you definitely want. You definitely want to look at those options up front. I mean, just because again, we're going to look at the best option for your situation. Everybody's different on what their reasons that they're timid to get into the market, right? A lot of them are just rate or the equity, or is this a good time to buy? I mean, I hear that all the time. Is this a good time to buy? And the answer is yes, by the way. And so, really just talk to us, and between you and me, we're all talking together and saying, hey, here's what I see on this side, here's what we see on this side, and then we create a plan for you.
Definitely. No, there's so many options, and I think now it's just educating everyone, and that's what we're trying to do today is, educate people of there's other options out there. And so, again, DFW, this growing market, this is the best place to be investing in real estate.
And probably America, that's what people don't even understand. I mean, there may not be a better market in America to have real estate. And yes, house prices have gone up, but yes, that's more opportunity to make equity in your property, down the road when, your appreciation that's going on here. So, I mean, everybody keeps saying, oh, the market's going to tank. Well, not here in DFW. I mean, everything we read is like 2 years out. So right now, everything we're reading is 2 years from now. We're still going to have a busy market here. So that, other than that, I can't tell you 5 years, no one can predict that. But right now, I mean, there was a time I read a stat that the DFW market was one of the most stable markets in the world. It wasn't just in the United States, in the world, it was like one of the best markets. So that was unusual when I read that, and I was like, I've been through it, I've lived here my whole time. So it doesn't feel like you've just been here and this is what it is, right?
It's just the norm.
Yeah, but I mean, it's amazing when you see it from that standpoint.
So buy now.
That's it, buy now.
So this is great information, Jeff. And I hope you guys all learned a lot, because I know I did too. I mean, it's just re-educating and bringing out some new different tips that are out there. So the summary of this is, if you're sitting on the fence, buy now.
Right.
And then if you have any questions, put those questions in the comments below. We'll be happy to answer or help you out. And again, this is Kimberly Woodard with Debbie Holiday Realtors signing off, and thank you, Jeff.
Thank you.